Three of business aviation's most noted analysts offer their thoughts about what our industry's rebound from COVID-19 will look like. From the National Business Aviation Association, this is Flight Plan. I'm Rob Finfrock with your trusted source for business aviation news. In our last episode, NBAA held a journalist roundtable to explore our industry's COVID-19 moment, how it compares to past downturns, and what the future, hopefully a brighter one, might look like. Today, I'm pleased to welcome three respected industry analysts to also consider those questions. They are Richard Coe, Managing Director for charter intelligence firm WingX, analyst Brian Foley, founder of strategic research firm Brian Foley and Associates, and JetNet IQ founder Roland Vincent. Gentlemen, you've all closely tracked industry developments throughout this crisis. Before we delve into specifics, I'd like to ask each of you, starting with Brian, are we seeing signs of an imminent recovery for business aviation?
Well, I don't know if it's a short answer, but it depends. It depends on the segment we're talking about. But if we're talking about charter or people starting to fly Part 135, Part 91 again, I think we are starting to see some evidence of that.
Richard, what are your thoughts?
Yeah, I mean, business aviation aircraft activity has taken such a hammering, and we're looking at sort of 50% below normal at the moment, which is an improvement on 70% below normal in April. It's still looking pretty ugly.
And Rolly, are you seeing signs of recovery in our industry?
Yeah, I think we're going to see it, first of all, as Brian said, in the charter world. People are definitely interested in business aviation. Maybe they've dabbled in it before, or they are at least aware of it. The industry has a pretty positive image going into this recession compared to the last time. So I think people are going to experiment with it this time.
Rolly, you recently noted that demand for business aviation will most certainly increase in the future. What factors do you believe will help drive our industry's rebound in this crisis?
Well, people need to move, and there's no better way to move than in a private aircraft. There's no question. I think the industry has gone through a period of slow but steady recovery over the last 10 years. We don't have inflated residual values. We're at a point of pretty balanced supply demand coming into all of this. So a lot of fundamentals are in much better shape. And I think as people consider their whether it's their private travel options or the way they organize their supply chains going forward, I think business aviation has a lot of advantages that will be discovered.
Brian, you recently stated that not only are we seeing reduced operations from large cabin intercontinental business aircraft right now, but that sales of such aircraft have also dropped precipitously in recent weeks. What might that portend for our industry going forward in regard to international travel?
That's driven principally by these requirements for quarantine when you arrive at some of these countries. And until those are gone and people feel safer reintegrating with society when they get somewhere, we'll continue to see some slow activity in that area. As far as sales of big jets, it might be helpful to kind of contrast when they were hot in the mid 2000s, 2006, 2007. What really drove that was, I'd argue, supply and demand. You couldn't find enough big cabin aircraft to supply these emerging markets that were going crazy with stock markets and personal portfolios, and oil was pretty pricey. There was just lots of good things. The dollar was weak, so you could get a pretty good deal on these things. And as such, with the shortage, you had some buyers that were paying a premium just to buy someone else's spot, multi-million-dollar premium. Fast forward to today, and the situation is quite different, and we see some both subjective and objective evidence of that. First, these emerging markets that were going crazy before aren't doing so great right now. Their stock markets, they're being down, the geopolitical instability, a dive in natural resource prices, and even look at China. Once upon a time, that was the fastest growing jet market on the planet, I'd say. And today, because of their economy, because of the government's poor look on being ostentatious, that's taken a toll as well. And the fleet has actually contracted in that area. Also today, the dollar is pretty strong. So if you're overseas looking at a $50, $80 million airplane, that gets inflated pretty fast in your own currency. And Lastly, oil prices. You think that being so cheap today, you think that would be great for big cabin jets because they can use a lot of fuel. But in fact, many of the owners of these big jets are involved in the oil industry somehow. In fact, upwards of 1 in 5 big jets are sold to someone in an oil region or involved with that. So they've pulled back as well. But as far as hard evidence of this slowing down, you take a look at the Amstat figures that track transactions of planes. Back in the day, they used to account pre-owned sales. Big cabins accounted for 1 in 4. Today, they're down to about 1 in 5. And last point I'd say is Gamma, the folks that provide the delivery information and actually break it down by cabin size. You're able to see that back in 2013, about half of all new deliveries were big cabin jets. And last year was about a third. So it's all showing up in the sales and delivery figures as well for both new and used airplanes.
Richard, as you mentioned earlier, a recent WingX Advance report stated that global business aviation activity has dropped to at least half normal levels compared to 2019. That said, we did see traffic numbers start to climb for May, and you also emphasized the next phase of recovery will be the return of international traffic. When do you see that demand returning, and what's needed to drive that rebound?
Yeah, let me review a couple of points there. I mean, the first thing is that we have seen some good signs from business aviation. In the initial phase of the pandemic, we saw the utility of business aviation when airlines started locking up. We've seen that business aviation average activity over a 7-day period has come up on a global basis from a little under 4,000 sectors to over double that at the most recent date. So there's definitely a momentum upwards. In fact, business aviation as a share of all fixed wing activity has gone from about 20% to 40%. So, business aviation is really kind of stepping up. In terms of what happens next, as you allude, I mean, the international traffic has really been reduced most acutely, and the airlines think that their projection is that over Q2 we'll start to see domestic markets open up, over Q3 international, and it'll be Q4 that you'll start to see intercontinental. But they're going to hit this sort of quarantine issue, as is business aviation, and that's a key factor, because if in certain key markets like the UK there is this 2-week quarantine period, that's really going to kind of stunt the potential for a pickup in traffic through the summer, BizAv included. So I would say that's a big barrier. But lots of other lockdown measures are being relaxed. We are seeing some mixed but quite positive signals in terms of the in terms of the containment of the virus and falling infections, and I think that will see a sort of pent up surge in travel demand, and where the airline connectivity just can't manage that right now. I do see BizAv will see some pickup, not recovering its trend pre-crisis, but certainly some pickup over the next 2 or 3 months.
So, Richard, what hurdles remain in your view to seeing our industry recover from this crisis, and what factors may conspire to delay or upset that recovery?
I think the most interesting one for me is customer behavior. What happens to customer behavior in the wake of this crisis? Between those that certainly people are talking about corporate travel overall being diminished, because a lot of people feel safer and just as efficient working remotely, and that's going to be a real constraint for the airlines. I don't think that's going to apply so much in business aviation, because it's really in the business aviation world that deals get done, that transactions get evaluated in a way that can't be addressed remotely or online. So I think that a lot of companies that have got some liquidity will see a window of opportunity where asset prices are sort of relatively depressed and their competitors may be distracted, and and this will be a chance to really see if they can get those deals done. So I think that customer behavior question is, if there's enough, and I particularly see this happening in the US, of those companies that just see this as a kind of window of opportunity, we might be seeing through that behavior, notwithstanding some other sort of breaks and constraints, we may be seeing quite an important impulse for business aviation.
Brian, what are your thoughts?
It depends again on the segment. The industry is pretty diverse. The first hurdles are going to be those that sort of fall by the wayside. Those companies that were over leveraged going into this, had too much debt, maybe can't find additional sources because of that. And slowly, one by one, you're starting to read in the press, one or two that are reorganizing or doing something to fix that. I'd say by and large, the others have had time now to recoup and get organized and maybe take on some more debt, unfortunately, to get through this, to come out on the other side. If you're talking about manufacturers, how they're doing going forward, I think you're going to see a 25 to 30% reduction in deliveries by the sheer reason that most of those plants were closed for a quarter of the year. So therefore, deliveries will be down by a similar amount. For them to get going again, they'll have to get the supply chain whipped up again, some of which have been damaged by the airline carnage and the Boeing stopping some production. So that's going to be an issue for them. Charter will keep charging on. I see better things for them going forward if they can control their pricing and the race to the bottom that we always seem to hear about. There's certainly some more capacity in charter, so they're ideally positioned. And I hope to see a little pop as restrictions are lifted, at least domestically for them, and maybe even by this fall, a little more business use than personal. So I think it'll be a constant trend up. It won't be a rocket ship to the top, but it'll be a move in the right direction. FBOs are almost entirely dependent on business jet utilization. So the more those charter 91 and 135 flights go, so goes their business. MRO, I'd imagine, kind of got a nice spurt at the beginning of this thing as people parked their planes to have the maintenance done while they weren't using them. The story remains to be told, though, that once these airplanes come out, that business is also, like FBO, is driven by utilization. The more you use your airplane, the more it needs some maintenance. So it could be a soft patch for them after this gets flying again. But those are some of the principal segments and how it could go going forward.
Rolly?
Well, I agree with Brian in terms of you have to look at it by segment, but let's start with the manufacturers. They're the big boys in the park in a sense. They're staring at, obviously, a skyline, their production skylines, where they've had openings that they didn't expect. At the beginning of the year, some of the OEMs went into this year pretty much sold out. Others had quite a few gaps in that skyline. Think of it as production slots as they come along on a monthly basis, and are they sold or not? So in Q1, Textron was the first of the OEMs to say, hey, wait. And they had received notice, of course, from NetJets regarding the fractional cancellations or deferrals, however they want to describe them. And of course, the first to announce the furloughs, and then Bombardier, and then Embraer. And then, frankly, I think all of the OEMs have now been impacted and their supply chains. So, coming out of that, everyone expects this big hit this year, and we're at the dark point of the situation right now in Q2. So assuming some sort of recovery, we're obviously all dependent on a medical discovery, nothing to do with aerospace, but a virus solution, if you like. That's who knows when that's coming. They say 18 months, 24 months, nobody knows. That really governs everything. So beyond that, because we can't forecast that, how does this work? Coming out of the crisis, are companies going to begin to procure again? Are they going to get back on that path they were on? Or are they going to change? Are they going to look at different size of aircraft, or is range going to change? I mean, I would think that pulling in global supply chains, maybe more to European centric or North American centric, for example, that may pull down the requirements for those super long range aircraft. To some extent, I think that's probably going to happen. On the other hand, you've got at the light end, once people start to experience these aircraft, it could well be that they find it too small. We should expect that to go up by at least a passenger or two on average, and that's going to be a significant change. Are they going to be happy with a small cabin? You put 4, 5, 6 people in a small cabin. I think they're going to be looking at moving up from that into the middle of the market. So we're pretty optimistic about that so-called middle of the market, where you've got tensions related to the actual space of these small jets, causing people to want a little bit more.
Rolly, there's been a lot of discussion and apprehension about the possibility of a second wave of the coronavirus hitting later this year. That would certainly be bad news across the board.
Yeah, I mean, clearly that's probably the biggest risk that we, not just our industry, we can get hyper-focused on our industry. We're a pretty small player in the grand scheme of things. But yeah, I mean, that has to be the biggest threat. Here in the U.S., where we're sitting this morning, you start to see a lot of relaxation of social distancing. And frankly, I think a lot of people just not taking this very seriously, wanting to get back to the way things were. Well, that world has gone. And I think the way things were is just something we'll read about. I think there's a real danger of another wave of infections. And already, businesses that are reeling from this, that depend on people being face-to-face or serving them face-to-face, I think that's going to be very tragic. Let's hope that doesn't happen. And obviously, everything depends on the medical side of things, and we have no control over that. And like I said, we're a small business. So in the grand scheme of things, let's hope that doesn't happen. I think businesses, though, are preparing and have prepared for this current new world. If things do open up, business aviation should be first on the scene to provide services. And, I think that there are some things to look forward to.
Richard, what do you think?
If the virus has a serious second wave, I think it would be pretty disastrous. It would be extremely demoralizing for, even at the levels of kind of, social solidarity, let alone the impulse for traveling or not traveling. That said, I would say that perhaps, there's, in terms of likelihood, that the focus should be more on the second economic wave, because I think that is probably in our estimation the more likely scenario that in 4 or 5 months there is an economic wave that hits an industry that's already, as Brian Rowley was describing, at the FBO level, for example, quite a lot of small companies, same with operators, and they're likely to go out of business as that second economic wave comes in.
Brian, how do you think our industry will respond to this level of uncertainty in the months ahead?
If it's not too early to jump to a conclusion, I think business aviation has a bright future, in part because of this. And that's not to say we won't be able to build airplanes fast enough. There'll be so much demand, and the charter bookings will be full for the next 6 months. But rather, the pandemic just gave a new reason, a new justification to buy a business jet or use private travel, to keep away from the crowds. And that wasn't really an argument that we had before. Our principal arguments had been time savings, and that doesn't go away. It was to avoid the airline experience. So I think this will help keep the industry, above water, and maybe a little stronger going forward during the next downturn with this increased demand. One thing we've seen notionally, and I wrote a little article on it, but interestingly, those that own airplanes already aren't running for the exits and putting for sale signs on them. They're keeping them as long as they have the cash flow to keep them on board. They really don't want to get rid of them. We just saw a little blip, really, a half percentage point of pre-owned airplanes coming on the market in the last 9 weeks. So it's definitely not the run on the banks like we saw in 07, 08, when almost 1 in 5 planes were for sale all of a sudden after being 1 in 10. So I think that kind of foretells that people value private transportation.
Richard, what are your final thoughts?
I'm as positive generally as my two colleagues here. But just nuance that by saying that I think the next 12 months is going to be about hanging in there, and that's going to impose quite a lot of pressures on smaller operations in the supply chain. But I think that beyond that, we may be seeing business aviation able to disrupt and innovate in a way that it hasn't before. And as I said at the beginning, if business aviation is taking its share from sort of 20 to 30 or 40% of all operations, why shouldn't it take a bigger share in the long run and become a much more widely addressed service?
And Rolly?
Let's just say that times of crisis are times of innovation and disruption. I think Richard said it well. We're looking at this as a sort of a real opportunity for business leaders to say, look, this is the time. Now is the time. Others are huddled down in their bunkers and watching all metrics that have gone red. This is actually a very interesting time. It's a time to create businesses and to create business models. And we're looking forward to that. I think we need to find as an industry a way to fly our airplanes, 5 or 10 times more than they're being flown, like an airliner should be and could be flown. So there are things to do, make our assets more productive. And, if you're investing millions of dollars, well, the aircraft should probably be worked harder than they're working. So we look forward to those days.
You can find Rolly's latest reports on the state of our industry at www.jetnet.com. You can find Richard's insights at www.wingx-advance.com. And Brian's market intelligence reports can be found at his website, www.brifo.com. And that's the latest from the National Business Aviation Association. Remember, you can subscribe to all Flight Plan episodes at Apple Podcasts in the App Store, wherever you find your favorite podcasts, or download them from nbaa.org. I'm Rob Finfrock, and thanks for listening to Flight Plan.